Oh no, friends. I have bad news to share with you this Saturday. There is now a growing number of Social Security recipients that are finding themselves owing the federal government due to the latest cost of living adjustment. So more and more seniors are facing financial struggles, and it is now up to lawmakers to take action very soon. My dear friends, please make sure that you watch until the end of this video for all of the latest details. Also, I will be doing a Walmart gift card giveaway every Friday. Please make sure that you enter the weekly giveaway, friends, by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning the weekly giveaways. And do stay tuned because I'll be announcing the winners of yesterday's giveaway.
Because working people have been forced to pay for big bankers' bad decisions over and over. In the wake of three of the nation's largest bank failures in history, three of the largest in history, this committee held a series of hearings with failed bank executives, the bank regulators, and outside experts. It's our job to hold accountable everyone responsible for the gross mismanagement and risk-taking behavior of these bank executives that threatened the stability of our banking system. Out of that effort, this committee came together. Senator Scott and I worked hand in hand on this to advance a bipartisan bill that will hold bank executives accountable for their misconduct to help prevent future bank failures while protect consumers and taxpayers. The Recoup Act, the bill we passed 21-2 out of this committee, will ensure that executives who follow the Wall Street profit at all costs business model will not be able to cash out when their bad decisions threaten middle and working class families' financial security. The Recoup Act is an important and necessary step to prevent bank failures. This committee will work to get it passed into law. The collapse of the Silicon Valley Bank, of Signature Bank, of First Republic Bank illustrates why we need important guardrails on executives, on the way big banks operate. We need better protections, stronger capital liability standards, for instance, tougher stress tests, and more rigorous enforcement and supervision. The bank failures also raise questions about our federal deposit insurance system. That's what our hearing's about today. SVB and Signature ignored liquidity risk. They used overwhelmingly uninsured deposits, all concentrated in the same industry, to finance unsustainable growth. More than 90% of deposits at SVB and Signature were uninsured, more than 90%. That's about twice the average at Ohio's regional banks and far more than that at community banks. And when those bets don't pay off, venture capitalists triggered a social media-fueled bank run, a panic that led to consumers yanking $42 billion out of SVB in less than a day. Signature Bank lost $18 billion. When these banks failed, small businesses whose accounts were at SVB and Signature Bank from Ohio to Utah and across the country just wanted to make payroll. Ohio banks and credit unions didn't want to see their deposits flee to Wall Street mega banks. Regulators, both Republicans and Democrats, came together to prevent the panic from spreading, protecting consumer and small business deposits without taxpayer money. The recent failures were not the first time we've covered the losses of uninsured depositors. We used the systemic risk exception and temporarily expanded deposit insurance in the past, including during emergencies like COVID and the financial crisis of 15 years ago. We understand the need to protect depositors, promote confidence and stability in the banking system in a time of crisis. But it's also our job to make sure banking safeguards work for everyone, for consumers, for small businesses, for banks that serve their local communities, not Wall Street mega banks and big investors. Deposits serve a critical function in our basic banking system. They are the source of our money supply, the financing that banks use to make loans to middle and working class Americans looking to buy a home or start a business.
The amount of Social Security payments that you receive is primarily influenced by the total contributions made through payroll taxes during your active working years. In retirement, if your combined income, including the Social Security benefits and other sources, surpasses a specific threshold, you may be liable to pay personal income taxes on those benefits. Financial experts reveal that due to the yearly cost of living adjustments, an increasing number of Social Security beneficiaries are finding themselves subject to these somewhat concealed taxes on their benefits. Social Security benefits undergo annual adjustments for inflation through COLAs, but the income tax threshold for recipients have remained unchanged since the inception of benefits taxation in 1984. Consequently, whenever benefits receive an increase, a large number of seniors find themselves liable to pay income taxes on their Social Security. This issue has become a significant problem in 2023 due to the substantial 8.7% COLA, which was the highest in over 4 decades. USA Today reported that each year a growing percentage of seniors surpass the income threshold, leading to taxes being levied on their benefits. David Freitag, a Social Security expert, also referred to it as stealth tax. The current tax rules state that individuals with provisional income above $25,000 and joint filers above $32,000 may have up to 50% of their Social Security income taxed. For those with provisional income above $34,000 and joint filers above $44,000, up to 85% of their Social Security benefits are taxed. Provisional income includes gross income, tax-free interest from bonds and other sources, and 50% of Social Security benefits. So, for example, if someone has an income of $50,000 and receives $1,500 a month from Social Security, they will pay taxes on 85% of their $18,000 in yearly benefits, amounting to $15,300. The historically high COLAs in recent years have led to an increasing number of seniors being subject to the 85% tax. However, if the thresholds had been adjusted for inflation over time, the original $25,000 threshold would now be around $73,000, and the $32,000 threshold for couples would be $93,200. Critics argue that these tax rules unfairly impact older Americans who heavily rely on Social Security as a significant portion of their retirement income. A survey by the Senior Citizens League revealed that 58% of older taxpayers desire adjustments to their Social Security thresholds. Solving the issue has been proven challenging, as seniors have not been included in the decision-making process. Lawmakers have not sought input from senior constituents or advocates during any discussions about changes to Medicare and Social Security. In nearly a dozen U.S. states, seniors might also face state taxes on their Social Security benefits, in addition to federal laws. During these inflationary times, a considerable number of older adults are facing financial hardships, yet many are unaware of the available help, and some valuable assistance programs remain underutilized. For instance, the SNAP program can provide aid to nearly 14 million adults aged 60 or older, but a significant portion of them have not taken advantage of this opportunity. Additionally, over 3 million adults aged 65 or older qualify for Medicare savings programs, which cover Medicare premiums and cost sharing, but they have not enrolled in these programs. Also, it is worth noting that many of these assistance programs are designed to support seniors with very low incomes and minimal assets. However, exceptions do exist, such as programs funded by the Older Americans Act. These programs, like home-delivered meals and legal aid for seniors facing home foreclosures or evictions, do not require means testing, although individuals with low incomes are often given priority. Moreover, certain local programs, like property tax breaks for homeowners, are available to many seniors aged 65 and older. Well, my magnificent and most marvelous friends, that is the end of my daily stimulus update video for this Saturday. My dearest friends, thank you so much for joining me here and for being part of this community. I will be announcing several winners for the Walmart gift card giveaway every Friday. My friends, please make sure that you enter these weekly giveaways by clicking and liking several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning these giveaways.